Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about Shopify stock. I will discuss their business, their future plans for 2023 and beyond, the risk associated with this company, and finally I will provide a detailed stock analysis using my personal discounted future earnings model, and will then provide you with the estimated fair value of this stock depending on your investment goals. The company HQ is located at Toronto and their shares are traded on TSX for almost 43 Canadian dollar at the time of recording this video. They don't pay a dividend yet and the market capitalization of the company is around 54 billion Canadian dollar. Shopify was the largest Canadian company by market cap at some point in 2021 and now it is not even among the top 10 Canadian companies. Shopify stock price chart is kind of disappointing if you look at it in the past few months, as it was basically just going down and down and down. And the investors in this company could not catch a break. It crashed from $222 per share to around $40, which means 80% crash. I never owned Shopify in the past. I like their business, their business model, but the valuation of this stock never made any sense to me. However, after crashing down almost 80%, I am now more interested in this company and actually considering opening a position in Shopify. In this video, we want to see if their business model and business fundamentals can allow investors to enjoy a smooth capital appreciation in the coming years, or if we are going to see ups and downs in the business growth and a stagnation in the share price again. Before starting the video, I want to emphasize that I'm not a financial advisor. This video is not a financial advice for you to buy, hold, or sell this stock. This is just my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. So Shopify is an online store builder or an e-commerce website builder that takes care of the infrastructure and provides additional services to small and medium-sized businesses like payment processing, marketing, analytics, inventory, and order fulfillment. Shopify makes money in two different ways. First is subscription revenue. This is self-explanatory and refers to the monthly recurring revenue that Shopify gets from the individuals or businesses that use their platform. This is a predictable part of their business where they earn money no matter how these businesses perform. The second revenue stream for Shopify is merchant solutions. This is the segment that takes all of other revenues and is highly dependent on the success of these individuals and businesses that use the platform. Payment processing fees, currency conversions, referrals, advertising, and all other services are basically included here. If there is a slowdown in the economy like this past few months, the e-commerce businesses will basically their profit will decrease, and this stream of Shopify's income would also be harmed significantly, as it is the case at the moment. Shopify in the last few years was one of the ultra fast growing Canadian tech stocks, and if we look at their income and cash flow statements, we can clearly see that they were a growth based and grew their business by almost 97% year over year between 2019 and 2021, which is superb growth rate for the company. And that's why the share price of the company exploded in the last few years. Of course, COVID lockdowns was positive catalyst for a company like Shopify and boosted their revenue and income artificially. Another point is that as the company becomes larger and larger, they probably would not be able to grow their business as fast as the last 4 years in the future, and that is something you should always take into account when investing in a growth company like Shopify. Shopify acquired another company called Deliver last year to implement infrastructure for optimizing fulfilling orders and delivery and have their own warehouses much like Amazon. This was an important decision by Shopify management to expand their business into delivery services, and we should see how their expansion pans out in the coming years, as Shopify now somehow competing even with Amazon in this space. I would consider Shopify a risky investment even after 80% crash. And the main reason I consider this a risky investment is that you can't model their future growth easily. They have lots of competitors in this space, and the biggest competitor is of course Amazon. Their ad business and social media storefronts can be hurt even more with the future privacy-focused changes in iOS, Android, or Windows, or with the changes in policy of social media apps like Instagram, Facebook, and Twitter. The retail side of the business can slow down significantly due to global recessions, and basically no matter how hard you try, the future of Shopify is unclear. It could be the largest e-commerce platform in the world in the next 10 years, or it completely goes out of business by that time. They have a very high gross margin of around 53% at least when their business was booming. However, the overall gross margin of Shopify has been decreasing consistently due to faster growth rate of their merchant solutions business, which is low margin inherently. In my opinion, as their overall business is based on software, it should have good margins overall, and it means if they are successful in keeping their customers on board for long term and collect the juicy recurring revenues, they will make a lot of money in the future. But this future is highly uncertain. And that's why I will take this uncertainty into consideration during fair value estimation of Shopify. This is my favorite part of the video, where I can show you my stock analysis based on the financial data I discussed in the previous parts of the video. I use a discounted future earnings model, which basically estimates values of stocks based on projections of their future earnings. Shopify is a very difficult company to model, as they had lots of ups and downs in the recent quarters, and they even had quarters with negative earnings. So I make some assumptions about the revenue, margins, and the growth rate of the company in the next 10 years, and then discount the future earnings into present value of the stock based on my expected rate of return. So I start with estimating their earnings, the earnings of the company, by using their total revenue and operating margin, which should be in line with other similar software businesses. I consider the margin to be between 20 to 30%. And based on 3 different scenarios, I predict the future cash flow of the company, the future earnings of the company in the next 10 years. In the bear case, or the most negative case for the stock, the company can grow their earnings by 10% in the short term, and then the growth will slow down to 5% in the long term. Again, I try to be conservative with Shopify growth in this case, as their business in a bear case will have ups and downs. I consider the terminal multiple of price to earnings of 10 for this case, which is consistent with historical bear periods for software businesses. For normal case, I consider a little bit better growth and a terminal multiple of 20, which is historical average multiple for this type of businesses. For the bull case, or the best possible outcome, I consider Shopify to grow by 30% in the short and mid-term, and then basically the growth rate drops to 20% in the long term. And I consider a terminal multiple of 30, which is definitely a bull multiple for this company. Now, I assign a 50% chance to the normal case, a 25% chance to the bull case, and 25% chance to the bear case. For growth and risky stocks, I usually expect 15% return, and for dividend stable stocks, I expect 10% return. If I expect a 15% return from Shopify to account for my margin of safety, the fair value of this company is around 29 Canadian dollar, which means compared to current share price of almost $43, the shares are traded at a 33% premium, which means it's basically not a buy according to the model. Shopify can very well goes back to its all-time highs in the future, but for me, I only consider the stock if it drops below $30. In that case, I have a margin of safety and I can comfortably own this company in my portfolio. It's always fun to see what analyst predictions are for the company, and according to research team, Thomson Reuters and CFRA, Shopify is a hold with a neutral view on their future. If you read their actual reports, they say some bullish arguments and some bearish arguments, but overall, even analysts are confused and they're not sure about valuation and future of Shopify. In summary, while Shopify has a great platform for small and mid-sized businesses, and they have lots of potential for future growth, I would personally not going to buy Shopify at these levels, only due to rich valuation of the stock and potential risks, as I need enough margin of safety before buying such a volatile business like Shopify. I would be interested in buying the stock if the stock price drops another 25 to 30%. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you guys in the next video. Farewell.